Welcome to the next episode of Wall Street Station. Today we are continuing our series called A Technician. So that's the mainly educational videos related to stock market technical analysis. So these are the, I would say, the base that will help you to increase your winning rate and just move this winning odds to your advantage. So that's a very important series, and I wanted to focus right today on false breakouts. So that's very important concept that will help you to understand the market structure and how to not fall into trap of market makers that are very often just playing with your understanding of the market, and that simple concept, that understanding, this comprehension of this idea, of this observation will help you to really decrease your losing percentage per trade. So let's get straight to the first element. So first, let's have a look at Auto Draw. That's the program where we make a scheme of different market scenarios in order to compare this better. So first, explain what the trend is. So trend is normally a sequence of higher highs, higher lows. That's the uptrend. However, we also have a different type of a trend. That's a downtrend, characterized by lower lows, lower highs, as right here. At the sake of an example, let's focus at first on the left trend. This left scenario where we have an uptrend, and if this next leg will reach, maybe I would draw it. If this next leg don't really rebound out of the area above this previous trough, and we'll get back even lower to the level has been reached and breached with this aligned horizontal line, we'll have a possibly the scenario where we are trying to break the market structure. The market structure break appears when we have a very particular technical analysis concept been broken right at this point where this definition of single pattern or any type of formation is trying to break. It means that that's the possible inflection point of a break of market structure. And that's the point where many of traders are starting to ask themselves whether we are right at the point where we're trying to break this Dow Fury about this trend, the Dow Fury that assumes that an uptrend is literally consisted of the structure of higher highs, higher lows, or is it just a false breakout? And right at this moment, as we are right now breaching this horizontal line that is aligning 2 points together, we are becoming a subject of concern whether this uptrend can really persist for longer. Right now, we have many doubts about this possible trend about to get broken, but many of traders that had positions right on the market had many of stop losses right below the previous lows. So right here, and right here should be many of liquidity in order to just get triggered by this heavy pullback. And guess what will happen right after? So if it's a first time that the market is trying and making a first attempt to break the market structure and move lower, normally with this many of orders been triggered by the buyers that were betting for this uptrend to continue, that were catching up the trend right within this leg and that leg. Many of them that had stop losses right here have formed and built up such a ton of liquidity in order to make the large buyer to load up and make this trend under advantage. So after that many liquidity has been given up, the momentum coming up from the bottom just pushed the valuation higher, and the next leg was even stronger than the previous one after those many traders have been stopped out. So this type of strategy prepared by a hedge fund or any other whale is strictly planned right beforehand. So whenever you find that there is a very healthy uptrend, but at first when the market structure is trying to break in, let's observe right after. If we have within a moment, within days or even hours, a very strong situation where we can observe that many of candlesticks are preparing to take off, normally we will have supposedly the risky type of a rebound for this market structure to not get broken. However, it only the most oftenly works once. So if the market structure is at an attempt to get broken but it's rescued, it's the last possible leg that might be the quickest, might be the strongest, but when this may supposedly happen right in the future, there will be a very low chance that the market will behave as this once again. And you may ask right here why this last leg is supposedly the strongest one, as it's why the impetus of this leg has been built by those that were just been trying to take their position right from those two legs, but been stopped out right here, and right now we're catching this leg right again at the higher valuations. So it's normally this false breakout causing an even better opportunity for those that were just observed the market and reacted right after this large buyers has stepped in. So very similar concept, but reverse one will happen in a downtrend. So let's assume we have such a pattern, but one of the pullbacks is reaching this previous highs, and even the one that has breached the previous point. So when we have this type of a move, when we're trying to break the market structure upside, many of traders that were just aligned in buying right with this moments right here is observing the market and noticing that the market structure is trying to break, and in a concern of having those returns of their investments been crashed even further. They're trying to quickly escape the position, and what happens right after those market makers that are or large buyers that are trying to catch the wave are absolutely ruthless, and right here trying to jump onto the bandwagon and push the valuation even lower below previous lows. And the same situation is that those traders that were buying or selling the positions right at the previous legs start to catch in to this lowering valuations right during this leg being already formed. So as a case study, let's observe many of different trends, and you will find out that very often this Dow theory of breaking market structure is being broken and touched through very, very slightly, that the market is rebounding out of right afterwards. So that's very important element that you need to observe to not fall into the trap of market makers, and that is something that will help you to profit along the way. Thank you very much for today's episode, and we will see each other tomorrow. Bye bye.